tryna take it down, place for you just scoring minds, best of bar.
All right, ladies and gentlemen, I got your watch list coming in December 19th, 2019, and the big thing is going to be the impeachment. It is going to be a big or little event, and what I mean by that is it is kind of priced in with the market. So we're going to talk about the effects of the impeachment tomorrow. It could bring up a lot of different possibilities. We're going to find out here in a few hours not only what actually happens, but more so how does the market respond. So it's going to leave a few scenarios on the table, but beyond that, we still have this end of the year coming up here that we need to wrap up. So I want to talk about that. I'm going to go over the plays that we made today and then discuss some of the plays and stocks we're going to be watching tomorrow. So let us get into it without any delay. You know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it's pinned in the comments. We better see you there. We are trading live. All of these plays, you get to watch it live. You could come in and ask questions. New guys, don't be too shy to say hi or too high to say shy. We love all of you. All we ask is that you're positive and respectful. We got an awesome community. Shout out to Chad, baby. Source their news. And speaking of which, the most important thing you need to do, post your watch list below. Let us know what you're looking at. If you got any plays, anything you're looking at, source that YOLOs. I know y'all like the YOLOs, the NOLOs, the BOLOs. Let's just get into it. So let's talk about this. What is going to happen if there is an impeachment? At first look, it sounds a lot worse than it actually is, but we kind of are forecasting that the market has priced this in. That's at least what I'm expecting, because if you saw some of Donald Trump's tweets today, he was explaining that they are going to impeach him. He literally said that. So some people took that as him joking around or being sarcastic, but how the process works, there's going to be this vote through the House of Representatives. They are most likely going to vote to impeach him, and what that would do was get the process started or bringing it towards the Senate. So that doesn't mean that Senate is going to kick him and he's actually going to lose his presidency and all that. So it's kind of more for title and show and all this, but most people are pretty much expecting that he is going to get that impeachment, but that it won't have really that big of an effect. So now, if anything comes up out of nowhere and there is a surprise and they bring up more than expected happens, it could be a black swan. It would truly be a black swan, because if this event escalates somehow not priced in or expected, the market really isn't ready to react to that. That's what we're seeing here. But for the most part, it seems like the market is kind of bracing for this. That's why we haven't moved much, but we're still at this top. But ultimately, at the end of the day, when you have so many signals coming from Trump saying impeach, 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 this, like, literally admitting it, it is bracing the market. So they're kind of more prepared in that sense. So what's going to happen tomorrow? Probably nothing. The scenarios that I'm going to be looking for is, if it does, let's say it does get taken negatively, watch out for a dip off of the morning and then it goes up. Or if the market takes it positively, we might very well see a sell the rip and the market might go up and then come down. You might see a gap up. And I'm thinking, if things go well, and this is the thing I want to talk about, I've talked about this yesterday, pretty much every single day this week, because it's actually coming step by step. You're seeing it now. We saw some momentum slow down today. Some growth stocks sold off, but then a lot of the tech, they went up a lot, and you had a lot of 2, 3, 4% movers today. But then at the same time, you saw stuff still sell out in the market. Only went up a 0.1%. So this is perfect for this gap up scenario. I think we're going to see a gap up anywhere sometime by the end of this week, or even coming into Monday, Tuesday at the latest. Again, I could be wrong as well too, but this impeachment event could help set that up, because now if the market takes anything positively, that would give almost a green light for everything to start running. So that's what I'm going to be watching. Quite simply, the impeachment is probably going to have a very marginal effect unless acted upon by an equal or opposite force. And in this case, it would be something so surprising and damning, or maybe the Senate switches up somehow, which is unlikely. You know, statistically, it's just really not there. And even monetarily, there's a lot of bets going on. That it's hard to observe the actual pricing of this event. There's stuff like predicted.org that kind of give you that. So that's one way to kind of monitor how people are pricing it in. But for the most part, you're not seeing panic. You're not seeing liquidation. You've seen what the market has done so far. If anything, it's been said more and more that Trump is going to get impeached than he is not going to. So it's not going to surprise the market. And, you know, the first time this actually came up, we brought about Bill Clinton. During his presidency, the market actually ripped during the impeachment all the way coming until the next year. So it looks almost as if it's playing that exactly. So we still got to watch out for the repos and everything else. But other than that, that is what I'm going to be looking out for tomorrow. So let us get into the plays. So we made a few plays. I want to talk about what we did with the Bank of America first. This was probably the most interesting play because it shows something that you guys could do with options. So if you guys remember this, we had the Bank of America 35 calls for next week. We bought 5 of those before the Fed. That play has been awesome. They were up, I think, 310% right now is what they closed at. Earlier this morning, they were like 600%. So the play has not only worked, but it's actually held up here for a decent amount of time. You can see the contract is held up very, very nice, and that's because they got in the money on the Bank of America. So we had 5 of them, and then we ghetto spreaded that. So remember, we had 5 of these, and then we sold the 36 ones to collect some money and then cap our gain at $500 with 5 contracts. So what I did today, I sold out 2 of these, and then I covered 2 of these because, again, I sold 5 of these initially. So since this was a sell contract and it was covered by these, we had to close them out at an equal ratio, 1-to-1. So now I'm holding 3 of the 35 calls and then 3 of the 36 call sells. So that was the first part, and that was so that we could take some cash. Again, we're coming into next week. I like the Bank of America. I still like the play, but I wanted to find a way to make this a win-win. So I wanted to take a little bit more cash, got to walk away with like $90 from these, and then it cost like 17 or $15 here to close out 2 of those contracts. So it was like a $75 taking profit on this one. Remember, we even collected $50 initially here. So it got to trim the position, but now the next part, I added this play right here. I grabbed the 35 put. So it's the same exact expiration. Think about it now. We own the 35 call, but I only got 1 of them, and that's because this one cost a lot more money. So I spent $26 on this, but remember, we got some of the profit. So I got to walk away with that $50 again and keep, now you see I have some cash in here when before I was only down to like $20 or so in cash on this earlier in this account. Again, this is the small account, but the key with this play, it's now allowing me to be in it on both sides, and now it's kind of a win-win all the way around. Actually, the way we do lose is if Bank of America pretty much stays at 35 flat. So it gives me pretty much until next week. If it drops below 35, well, we need it to pretty much go down 20 cents below 35 to break even. But if it kind of comes back here, we'll walk away with another $20 or $40 on there. Or if it keeps going up, we still have a $300 max gain through the ghetto spread. So by putting $20 down, it gives us an opportunity to scrape out another $50 or $100, or who knows if the stock really does drop anywhere below 35, or now if it goes above 35 to like what, as we were expecting, we now have a little bit more assurance to let us hold it and play it out till next week, which is what we want, especially when we have a contract in the money. But now the fact was the puts got so cheap because we were already in the money in those calls. We bought them so cheap, and now they're worth so much in value. We were able to kind of hedge the position for a much cheaper price. So that's the first play I did. That's how I played the Bank of America. I know some of you guys were in there, so congrats if you got that. It's been an awesome play, and I don't think this play is dead. I would even say this could be the trade of the month because I said it once, I'm going to say it again, it reminds me of TLT. If this thing could it's going to keep bouncing like this, it holds its range. If it does start to break out with a gap up or anything, the contracts are going up and down, but still holding value. There's going to be a lot of froggers on this one, baby. So keep on watching. I like Bank of America. That's the first one. The next play we did close out of our Lulu and Shopify. So I closed that Lulu Iron Condor today. We bought it back for $153. Remember, we got about like $390 or something, or $400, let's say. For simplicity's sake, it was about $250 profit on that. And then I closed out of the Shopify's for $321. We bought that one for 31 cents. That was an 1,000% gain on that debit spread. So we'll take it. So the Shopify, I think, Shopify kept ripping today, and we could have actually profited on that if it went up, but it kind of closed up. So we actually sold at a great price. I think the contract may have went up a little bit so far because, again, you're at max gain. So if you push this to the end of the week and you hold it till max gain, and the stock ends at like 390, you're going to be you'll be able to take the whole max gain. But if it goes below 390, then you could risk it a little bit. But the Shopify, there's still some max gain, so you could play it a little differently. I just was trying to be cautious there. I said, we'll take it, we'll book the profits on there, and then we'll see what we could possibly even YOLO or play on the shorter term towards the end of the week with some of the profits there. But I like Shopify. I'd even keep them on watch. And then the next play we made was AMD. So AMD sparks from Micron. They had their earnings today. They shot up. You guys see they're up $2.49. If we went over the pricing in If you guys aren't familiar in that, I have a video called Turning $160 into $1,600 on Tesla. That will explain a lot of this pricing in and how you're supposed to look at the premiums at the money. We explained it on stream today, but even on Thinkorswim, there's a tool that shows you. But essentially, they were pricing in about $3.40. They moved to $4.40. So again, iron condors would have actually been pretty good on this one. But why I played AMD now, because I didn't like the premium. I didn't really like the move and how Micron was pricing in stuff. So I figured we might as well get AMD. There's been a lot of good and positive chip news, and the chip makers have been doing good. AMD was selling off already. I said, well, we buy AMD calls as a sympathy, because if Micron does good, AMD could run up with it, and that could set a good precedent. Or if Micron did bad, AMD might go down a little bit, but at the end of the day, AMD was its own company, so people wouldn't really attach what happened with Micron there. It's a weird logic, but that's how investors think. So we made those plays. I kept it really, really small. I only put $40. I did a next week 47 call on AMD, and that one's like, that's 3 standard deviations out the money. It's far out there, but that's why I kept it small, $40. And then I grabbed one with time, grabbed an AMD 50 call for January, and I believe I paid like 14 or 15 cents for that one. Yeah. So I wanted to get one with time and one in the short term, but I really do like where AMD's at. You know, NVIDIA is getting good news towards all-time highs. A lot of the chip makers look like this, so it's good. Again, the fact that they've held up from here, AMD is known to go on crazy runs, and it's either going to have to give it up now, or it's going to just keep running up into the end of the year. But now with stuff like positive with Micron, I think it gives a pretty good chance here. But that's why both plays, you know, to get 11 contracts, spent less than $60. So that kind of even lets you know, not too confident, but we're going out of the money, because if AMD is able to surprise and keep going up, those are going to be very, very lucrative. So I like that play. And yeah, those were the only plays we made today. Other than that, though, I want to watch all these. There's going to be a few different potential plays tomorrow. And even the first one I'm going to look at is now I want to get an iron condor on Boeing. Remember, I brought this up at the beginning of the week. It's playing out almost exactly, but it's going to work to our benefit now, because even though there's a lot of confusion here, puts are still remaining expensive, and now the calls are going up. This is going to be beautiful to do an iron condor or even sell some spreads on it. So I'm going to look for one of these tomorrow morning and position on it. I don't really know. I'm still caught up between times and dates. I don't know if I want to go either this week and try to do a shorter term gamble, or go next week. I might even do both, but they're going to be good. Like I said, I'm going to watch for shop to kind of reinvest and see if it does start getting some of that crazy moves. And again, if it hits the all-time highs, which reminds me now of Tesla. I said this thing is going to go up to 380 again. It hit 380 and went to 390, but Tesla might be a good one to play this week, and there might be some nice frog opportunities because what the option chain is pricing in. Tesla is pricing in 2 standard deviations on the weekly. So that means the contracts are expensive, but at the very least, it is unanimous. The whole entire market thinks Tesla's going to move a lot. So it's going to be a play, and I'm going to keep looking at that. We just not going to get the YOLO FOMO demon. If it's there, we'll strike. If not, you don't want to force it and get caught up with anything. But again, too, high IV, high premiums, you sell a credit spread. But I like Tesla. And then Intel, again, with all the chip makers and kind of where they're at, I think they're more stable, AMD, and they're not really getting the same attention I would even say they deserve. So I'm going to be looking at Intel, and I like them. As far as even specific option plays, next, we're going to watch the HDs. Those came down a little bit, but they're still expensive. I still want like the 220s for next week at a cheaper price, or the 250s if I could get them like sub 15, sub 10 cents. That's the one I'm looking at there. Then there's going to be the McDonald's. McDonald's keeps coming off now too. This one might be good for one of those credit spreads, or if it does start coming down to the downside, if we do get that positive rotation into next week, this could be a really, really good short and put coming into next week. So I'm going to actually keep my eye on that. Someone remind me about that too. And then UNH, I like as well too. Those 295s we brought up at the beginning of the week. Those are 40 cents. They were or 40 or 60 cents. They're worth like $1 something now. They're up there, but I'm gonna watch them. They could be the frog, but I don't want to get caught in the musical chairs game with UNH. And then lastly, well, not lastly. Well, yeah, there's a few more. Watch Microsoft. I'm gonna like them. They went up a lot today and came down, but they showed a crazy ability. They could start running, but this is one of those you could see high volume, but they're starting to sell off, and they actually closed red, and this is what I mean. Watch some of these downward rotations. The volume and drop on FedEx was pretty nasty, and now here's the thing. You've seen FedEx drop. you could give it a few days and it could start continuing down. So remember, we have that play till next week. I looked at some of the options this week. They were still kind of expensive. If you get that green bar here tomorrow, FedEx is going to be a continuation and a slow one on the downside. So do not forget about that. I'm going to look at them. And then Walmart, they dropped a decent amount. And then again, look at the rotation aspect. They were down 1%, but I still like that plays. The play even this morning was actually at break even. Then it finally dropped from like 9 cents to 7 cents. So I'm going to watch that play and see. I might even average down on it, but I still like Walmart in general. And then lastly, I'm disappointed I missed this one, Booking, with all the melt-up hype. So if we get any positive, more melt-up stuff, or essentially if the market starts to go green, don't forget about Booking. Yes, you could still play some cheap contracts, and even with some debit spreads, we can make some nice moves. So I'm going to watch out for them. And then finally, to the final chart, FANG, Facebook, Amazon, Netflix, and Google. They were very big leaders today. We saw Facebook take off in the morning. Facebook was insane. Those had some great 400% options. Amazon, not so hot, and this is kind of showing you some of that rotation, but they didn't drop as much. But watch, because the day we get all four of the FANGs and the growth and everything going up, that's going to be your gap up day. But Netflix did very, very well, just like Facebook. That got a lot of attention. And then Google kind of right in the middle. So you're seeing, but in the middle between, not down 0.5%, not going up, down 0.25%. But I like Google in general too, and kind of this push and pull between some of the FANGs. But those are going to be important. Those are going to be good bellwethers, but there's a lot of plays on the table, baby. That, mix it in with a little bit of impeachment, some other news, some trade. It's going to be a good one. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Better source that information and stay in the game and be smart. The opportunity is right around the corner, baby. Don't forget your armor. I need your head in the game. You better make some good choices. Set aside a budget for the end of the year right now. There's going to be some little plays out there, so don't be hesitant at all. No hesitation, but don't be reckless, baby. But that's all, man. You know what I gotta say. So have a wonderful day. Let's go.